Thank you for joining us at XM.com. This is the Weekly Forex Outlook video. I'm Christina Marujos. With me today is our senior investment analyst, Marios Hadjikyriacos, and we'll be looking at the week ahead. So, Marios, the main event is likely to be the latest CPI inflation report from the United States out on Thursday. Now, the dollar took full advantage of the spike in yields this week to shoot higher. Could the inflation report add fuel to its recovery?
Hello, Christina. I think so. Look, the dollar had a great week. We got some news. Of course, we had the US downgrade. I think that was a minor event, and that the big event that pushed yields higher was an announcement by the Treasury that they will be increasing their bond issuance over the coming months, and that helped to lift US yields, and it boosted the dollar through the interest rate channel. Now, moving forward, of course, the question is this the beginning of a lasting recovery in the dollar, or is it just a correction within the downtrend that started last year? And we're probably going to get the answer on Thursday with the release of the upcoming US inflation data. Now, forecasts suggest, Christina, that both the headline and the core CPI rates in monthly terms rose by 0.2%. That's the official forecast by economists. Now, there might be some upside risks surrounding this forecast, so I see some scope for a hotter than expected inflation report. And the reason is the Cleveland Fed has a model that attempts to forecast inflation, and that model currently points to an increase both for the headline and the core CPI rates of 0.4% in monthly terms. And this model tends to be quite accurate. So there might be some scope for a hotter than expected inflation report. And if that's the case, then that could translate into a stronger US dollar as traders recalibrate the Fed's interest rate path in a higher for longer direction, essentially betting that the Fed might raise interest rates one more time, or that any rate cuts might be further out into the future. So I think that the inflation data could help the dollar, and overall, I think that the outlook for the dollar is quite bright. Now, the reason being, it comes down to relative economic performance. The American economy as a whole remains really resilient. The economic growth is around 2%. Consumption has been very solid. The labor market is still in good shape. Now, in contrast, if you look over at Europe, things are not going so well. Business surveys suggest that the European economy is slowly descending into recession because the downturn, the problems we've seen in the manufacturing sector have started to infect the services sector. So the American economy is certainly stronger than the European economy, and ultimately, I believe that's going to be reflected in the forex market, which argues for a lower euro-dollar. It could keep downward pressure on euro-dollar.
We'll stay on the FX front, but we'll turn to the United Kingdom now, Marios. The Bank of England yesterday disappointed those expecting a bigger hike, and of course the pound took a hit. Now, how can we see the currency perform this upcoming week on the GDP data for Q2 out on Friday?
Yeah, so the pound took a minor hit after the Bank of England disappointed a little bit. They raised interest rates, but they delivered a smaller rate increase. Now, look, the pound lost a little bit of ground, but it's still the second best performing currency this year, only behind the Swiss franc. And this rally in the pound, it comes down to two main elements. Expectations that the Bank of England is going to raise interest rates higher than other central banks because the United Kingdom has a bigger inflation problem than other economies. And the cheerful tone we've seen in the stock markets this year, it usually benefits the British pound. The pound is almost linked to risk appetite in the markets. Now, the question, of course, is, are these two elements going to remain in force? I'm not so sure. Business surveys suggest that the British economy is stagnating, essentially, but inflation is still hot. So it looks like the United Kingdom is headed for a period of stagflation, which is usually not so good for a currency. Now, similarly, I see some scope for a correction in stock markets. I think the stock market looks vulnerable here as yields go higher because, yes, we've seen a massive rally in the stock market, but that rally wasn't really backed by by rising earnings. All that happened was that the valuations became more and more expensive. Therefore, if we continue to see yields rising, that could spark a correction, essentially, in stock markets, and that in turn could inflict some collateral damage on currencies like the pound that are very sensitive to risk appetite in the markets.
I see. Marios, thanks so much. This was the Weekly Forex Outlook. Thanks for watching at xm.com.